Hi, I told you that I wanted to continue our discussion of governmental accounting and reporting, and so we're going to pick up with the governmental operating statement accounts. So this is the statement of operations, or this statement of activities is equivalent to the income statement. Its focus is budgetary accounting. So we have operating expenses and revenues. At the government-wide level, we have expenses minus program revenues equals net expense or revenue. So this is a little bit of a change up from that typical equation we looked at where we said net income equals revenues minus expenses in regular proprietary or commercial type accounting. Here we start off with expenses minus some special revenues, program revenues, equaling net expense or revenue. So the focus is on that portion that's covered by program revenues. Those are very specific types of revenues. The remainder will be covered by what is called or considered general revenues. And we're dealing with something called net position instead of net income or net loss. In reporting for governmental accounting, we report by function, which is grouping by major service or area of responsibility. It could be grouped by program, which is a specific purpose or objective. And at the government-wide level, at the statement of activities, we're looking at governmental activities. And so here is what the typical government-wide statement of activities looks like. And so look over here. On our on this side, we have it divided up. The primary government is divided up by function or programs 1 through 5. Notice they've isolated the interest on long-term debt. That happens because they can't specifically associate it with any one program. So when it isn't something that can be associated with the program specifically, they will go ahead and list it separately. So first they list all the expenses by program or function, and then they look at the program revenues. And program revenues are of 3 types: charges for services, operating grants and contributions, capital grants and contributions. And so the difference between expenses minus the sum of those different program revenues equals your net expense or net revenue. Okay, many times in government it ends up being net expense, and that's why the default here is to a negative number. So then this number has to be covered somehow. We can't report this as a loss. So we come down here to the general revenues, and government collects a lot of general revenues, and you're going to recognize these. So we have property taxes, sales taxes, other types of taxes, grants and contributions that are not restricted to particular programs, and investment earnings. They can also have special items like the gain on the sale of government land. They also can have extraordinary items, loss due to volcanic eruption. And so they'll have a total general revenue, special item, and extraordinary item amount, and then a change in net position. And then their net position at the beginning and net position at ending. So what will happen is this total governmental activities here, which is typically going to be a net expense, will be partially funded by these general revenues. At the local level, city and county, the sales taxes, which generally go to the state, part of that, if you look at the way a government breaks down sales taxes, I'm sorry, knocked into my own desk here. Part of the sales tax money does go to the state, but part of it can also be sent to the local governments. SPLOST in Georgia is an example, a special purpose kind of sales tax add-on. So maybe the sales tax rate is 6%, and the local government puts out a referendum to add a penny to the sales tax within their jurisdiction so that they can go ahead and collect that money. It gets divided between the county and the cities, and they use it for some special purposes. The SPLOSTs this year were both defeated, both here in Whitfield County and also in Catoosa County. And so the extra money that would have been used for buildings and road improvements and things like that, that was all rejected. Now, does that mean government isn't going to do those things? No, it just means that the money's going to have to come from someplace else. So at any rate, so this is the statement of activities at the government-wide level and the way it is structured. And so it is very different from what you're used to seeing for a business enterprise. We also are concerned with direct versus indirect expenses. So we've got things like depreciation expense and interest on long-term liabilities. If those expenses, again, can't be tied specifically to an objective, a program, or a function, then those items will be reported separately beneath the programs and functions. And again, program revenues versus general revenues. Program revenues, charges for services could be from licenses and permits, fines and forfeitures, and operating special assessments. Grants and contributions, which are typically operating, they're generally restricted by the third party for some kind of operating purpose related to a particular function or program. There can be multi-purpose grants and contributions. They must state the restrictions in the grant agreement. And earnings from endowments, which are in the permanent fund, those are the investments, those are restricted. So grants and contributions capital, they're the same as operating, except the purpose is a capital project. All taxes are general revenue, even if restricted in use by law. So an example would be motor fuel taxes. Even though the use is restricted, it's still considered a general revenue source. When we look at program versus general revenues, we are really examining how self-sufficient a program or function is. So what percentage of its expenses are covered by program revenues versus how much of it is needed, how much has to be covered by general revenues. And general revenues again include property taxes at the local level, sales taxes at the state and local levels, other taxes that can be assessed, grants and contributions, both unrestricted and multipurpose, and investment earnings. Special items include extraordinary items, which are both unusual and infrequent. Special items are those items that are unusual or infrequent. Notice the key difference there. Extraordinary items has to be both unusual and infrequent. Special items are one or the other. Either they're unusual or they're infrequent. Additions to principal, which affect endowment and permanent funds, and then transfers or non-sale between funds. Ignore the references to sections and page numbers. That's from the textbook I use when I teach this class face-to-face. Now let's take a look at the general fund. General fund again is focused on current resources which are raised and expended on what we call core government services. And so the general fund is an operating fund and it is a current fund. A special revenue fund, which is another type of governmental fund. So we have the general fund and now we have the special revenue fund. This is where we have restricted revenue sources, and it's restricted by tax, by law, or other legislative action. A contribution or grant by a donor or grantor. An example would be state gasoline taxes that must be used for, say, road improvements. So those would be accounted for in a special revenue fund. There are other governmental fund types, which we will talk about at some point. There's debt service, capital projects, and the permanent funds. So examples of current financial resources, these are very typical. Again, you should be used to these from the regular commercial side of accounting: cash, accounts receivable, marketable securities, prepaid items if they're material, inventories if they're material. We only report current liabilities when it comes to general and other governmental funds, and report the fund balance, which is the difference between current assets and deferred outflows and current liabilities and deferred inflows. So we take the difference between those two sets of numbers to come up with what the reported fund balance is. So excess fund balance is not equivalent to owner's equity. So don't think about owner's equity when we're dealing with governmental financial statements. And so we have a picture here. We've got the assets equals liabilities plus fund balance. That's our revised equation for government. Instead of assets equals liabilities plus owner's equity, it is assets equals liabilities plus fund balance. And you can see the different examples: cash, receivables, investments, prepaid items and inventory if they're material, liabilities, accounts payable, accrued liabilities. The fund balance, there are different types. There's non-spendable, restricted, committed, assigned, and unassigned. We'll go into the differences later on those. And there's also budgetary fund balance. Remember, I told you we're dealing with budgetary accounts as well. So we have operating statement accounts, revenues, expenditures, other financing sources, and other financing uses. And budgetary accounts, estimated revenues, appropriations, estimated other financing sources, estimated other financing uses, encumbrances, and encumbrances outstanding. And the term encumbrances is also new to you, and we will talk about that at some point in the very near future. This is an example of a statement for funds, for governmental funds. So we have, for the general fund, 2 major funds, and then all the other non-major funds in a single column. It's in kind of a general single-step format. We have all of our revenues over all of our expenditures, and then we have other financing sources and uses reported under that. We report a net change in fund balance, and we show the beginning and ending fund balance numbers for each of the general fund and major funds and the combined miscellaneous other governmental funds. And then we have a total column. In terms of budgetary accounts and operating statement accounts, this is the area of the journal entries that I need you to kind of be able to wrap your head around and think about. And so we look at it and we say, for estimated revenues, the normal balance is a debit. Remember, you're used to seeing revenues as a normal balance being a credit. But when you're posting a journal entry for a budgetary item and establishing budgetary revenues, it has to be opposite what the actual revenue would be. So when you actually record revenue, you're going to record it as a credit. But so that they offset and you end up with a net budget amount, what's remaining, so you can tell whether you've met your budget or not, that has to go in opposite the normal balance for the operating statement account. So hopefully you kind of get that. So we also have estimated other financing sources. That's the budgetary account. That's a debit balance compared to other financing sources, operating, which is a credit balance. And then you have other estimated other financing uses and encumbrances. Now, encumbrances doesn't have an operating statement account, so it's a debit balance in the budgetary account. It is a budgetary creature only. It does not exist in operating account statements. Okay, and we'll talk more about what an encumbrance is in case you didn't understand it in the reading. So, again, ignore the chapter references. So, budget to actual reporting. It's described in the notes to the financial statements. It is legally binding, meaning it's legislatively enacted. So the city commission or the county commission or the state legislature will adopt a budget, and that becomes a legal binding document that is incorporated into the accounting and reporting system or integrated into the ledger. As far as Gatsby requirements, we report for the general fund and each major special revenue fund its legally mandated budget. We also include information in the required supplementary information, and we recommend a variance column so you can see the variance from actual to budget. Budgetary accounting focuses on there's a basis for budgetary accounting. We also consider the timing, the entity, and the perspective. For the Gatsby, actual and budgetary amounts use the same basis. If not, that must be disclosed and a reconciliation must be provided. So, in general, budgetary accounting and the actual accounting have to be reported on the same basis, or disclosure and reconciliation is required. And there's a separate video that talks about expenditures. In order for something to be able to become an expenditure, it has to be appropriated. So there's authorizations and appropriations. Appropriate is to set aside or put out there. So the legislature has to appropriate funds before it can actually be spent. And so expenditure is an outlay. It's a disbursement, a payment. The appropriations are the estimated expenditures that are established by the legislature. There is a classification system. They can be classified by fund, by function or program, or by organization unit. They can have an activity. There can be a character that can be current, capital, debt service, or intergovernmental, and there could be a subdivision by object code in the accounting system. So there's lots of different ways that these are typically classified. For revenues and estimated revenues, how should they be classified? Again, by fund and by source, whether it's taxes, special assessments, licenses and permits, intergovernmental revenues, charges for services, fine and forfeits, miscellaneous revenues. Those are typical examples of sources that are common within the governmental environment. So you can have a source, a subsource. So example, you can have taxes. Under taxes, you can have ad valorem taxes, sales taxes, income taxes, gross receipts taxes, interest and penalties. So you can see how you can have continued drill down in the classification system. Miscellaneous revenues. I hate miscellaneous accounts, but they have to exist because not everything fits into one of the other primary sources. Examples of things that don't is something called an escheat, which is property that's turned over. It belonged to someone else, but they can't be found. So it's another term for escheat is abandoned property. Interest earnings, rents and royalties, contributions from public enterprises, private donations and contributions are examples of miscellaneous revenue classifications. So what budgetary control accounts are needed? We need an estimated revenues, we need estimated expenditures, which we'll call appropriations, and we need encumbrances. What's an encumbrance? Think about this. When in commercial accounting, when a company purchases something and issues a purchase order, nothing is recorded at that point. Now, in the purchasing system, it's recorded that the purchase order was issued, but if at that point financial statements are generated or a trial balance occurs, there's nothing on the trial balance or the financial statement that indicates that that purchase order is out there. In government, because we have budgetary-based accounting, the encumbrance actually records that event. So when the purchase order is issued, they encumber the funds. So that would mean if I have $100 budgeted to spend and I issue a purchase order for $10, there'll be an encumbrance in the books for $10, showing me that I only have $90 available to spend. What that does is it prevents the government from overspending. Otherwise, as in commercial business, you have an internal budget of, say, $100, but there's really no mechanism other than internal mechanisms controlling whether you spend the $100, spend less than the $100, or spend more than the $100. And if you issue a number of purchase orders, you can issue purchase orders for $120 and you wouldn't necessarily know it unless somebody told you. In the governmental accounting area, you're going to get an encumbrance report that's going to show you what funds are encumbered and which funds are not encumbered. Very important control mechanism. As far as subsidiary accounts and budgeting, we use whatever is necessary under the circumstances. And you can also have interfund transfers and debt service. This is part of your estimating other finances sources and estimated other financing uses. And I think at this point we're going to stop right there on this video because we're just about at 21 minutes. So hopefully this gives you a really broad overview of both government-wide and at the fund level. Again, we're looking at that dual track accounting. The government-wide is that longer-term operational. The fund level is the current uses. We're kind of looking at what's happening now. We're looking at outflows and inflows of resources during the current period of time. So hopefully this helps, and I will chat at you later.